It's a regular weekday morning. You're half awake, scrolling your phone while coffee brews, when you open your investment app out of habit. And something doesn't feel right. Your portfolio is up $287 today. Your take-home pay from yesterday's 8-hour shift? About $240. And suddenly your brain glitches. You didn't work today, but your money did. And it outperformed you. Not enough to quit your job. Not even close. But something important just happened. For the first time, your money pulled more weight than you did. Most people will never experience that moment. They'll work until their knees hurt, hope Social Security holds up, and pray their savings last. But there's a hidden milestone in money that changes everything. And once you understand it, you stop asking, how much do I make? And start asking, how long until I'm free? Today I'm breaking down that milestone, how to calculate yours, and how to reach it way faster than most people think is possible. Every financial life has two numbers. One drains money: rent, groceries, insurance, subscriptions, lifestyle. The other creates money: investments, stocks, dividends, interest, businesses. For most people, expenses are huge and investment income is basically zero. That's why missing a paycheck feels terrifying. But if you invest consistently, something strange happens. Your investment growth doesn't move in a straight line. It curves upward, slowly at first, then faster, then shockingly fast. Eventually, there's a moment when your investment income becomes higher than your living expenses. From that day on, working becomes optional. That moment is called your financial crossover, and it's not motivational fluff. It's math. Say your life costs $4,000 per month. Rent, food, car, insurance, fun, everything. That's $48,000 per year. Using a conservative rule of investing, if you can safely withdraw about 4% per year, you'd need $1.2 million invested. That's your crossover number. Not rich, not luxury, just financially unbreakable. Now here's the part nobody tells you. That number isn't fixed. It moves based on how much you invest, how much you spend. Change either, and the timeline changes dramatically. Let's say you invest $500 per month at 8% returns. After 10 years, it becomes $91,000. After 20 years, it becomes $275,000. And after 30 years, it becomes $670,000. You cross $1.2 million around age 65. That's the standard retirement path. Nothing wrong with it, but nothing exciting either. Now let's tweak two variables. Step 1. Lower lifestyle. If you cut expenses from $4,000 to $3,000 per month, your crossover number drops from $1.2 million to $900,000. You just erased $300,000 from your goal without earning more money. Step 2. Increase investing. Now invest $1,000 per month instead of $500. At 8% returns, you reach $900,000 in about 22 years instead of 35. You didn't win the lottery. You didn't start a startup. You just controlled spending and investing and bought back over a decade of your life. Here's the part nobody talks about. Freedom doesn't start at financial independence. It starts before. At first, your investments grow. $20 a day feels pointless. Then, $100 days start appearing. Then, $500 days. Eventually, your portfolio moves more in one afternoon than your paycheck does all day. And something in your brain changes. Not confidence, leverage. When your investments cover, your phone bill stress drops. Your groceries breathing room. Your rent, your job stops owning you. This isn't financial independence. It's financial control. And it builds gradually, long before full freedom. There's another level almost nobody knows about. Let's say you're 30 and want $1.2 million by age 60. At 8% returns, you'd need about $150,000 invested today, and you'd never need to invest another dollar. Compound growth alone would carry you there. That means you could switch careers, work part-time, start something risky, relax. Your future is mathematically secured. That's not retirement. That's optionality. Markets crash. Portfolios drop 30 to 40%. It's happened repeatedly, and it will happen again. That's not failure. That's the system working. The reason long-term investors win isn't because markets never fall. It's because they keep investing during crashes, buying assets on sale while everyone else panics. Every historical 8% return already includes recessions, wars, bubbles, crashes. Volatility is the entry fee. Most people fear market risk, but the bigger risk is being 65 and still needing a paycheck. That's health risk, energy risk, job market risk. Investing doesn't eliminate uncertainty. It replaces bad risk with better risk. Let's make this real. Step 1. Track your true monthly expenses. Not guesses, real numbers. Step 2. Multiply by 12, then by 25. That's your crossover number. Step 3. Subtract your current investments. That's your gap. Step 4. Plug your monthly investing into a calculator. That's your timeline. Now ask, how can I shrink that timeline? Earn more. Spend less. Invest raises, bonuses, tax refunds. Avoid lifestyle creep. Every $1,000 invested equals about $40 per year of income forever. Every $100 cut monthly equals about $30,000 less needed for freedom. That leverage is insane, and most people ignore it. Every purchase has two prices: the money you spend, the freedom you delay. Buy a $40,000 car instead of a $25,000 one. You didn't just spend $15,000. At 8% growth, that $15,000 becomes $30,000 in 9 years, $60,000 in 18 years, $120,000 in 27 years. That upgrade didn't cost money. It cost future time. I'm not saying never enjoy life. I'm saying understand the trade. Money isn't currency. Money is stored freedom. The average American will earn millions over a lifetime and retire dependent on Social Security and savings they hope don't run out. Not because they earned too little, but because everything that came in went right back out. No assets, no leverage, no crossover, just decades of motion without escape velocity. This isn't about extreme frugality. It's not about retiring at 30. It's not about never enjoying life. It's about understanding the math of independence and letting time work for you instead of against you. Spend less than you earn. Invest the difference. Stay consistent. The lines will cross. They always do, for the people who stick with it. And one random morning, you'll open your phone and realize your money made more today than you did. That's the day work stops owning you. If you want more videos like this, hit like, subscribe, and I'll see you in the next one.